Before
Wow.
let's not go into Baba first. Like let's
Okay,
try
cut.
to no Kiri. Yeah, cut. Where got jump so fast one?
Oh, and I think I spoke to my parents about like stocks, and then they were like saying like, don't even try those kind of things because like you'll lose money and everything.
Yeah, I just want to ask, like, have you watched Chiking's Baba video before you bought the stocks?
I asked that question because for me, I invest in Tesla. Then I see the stock like, wow, how it chong up and down and all this. I feel very emotionally fatigued.
Am I allowed to ask questions here?
Only those that we are
Okay.
comfortable with.
Wait, I just want to clarify. So there's only 2 stocks in your portfolio right now?
Welcome back to another episode of the Backholder Pod. So we have another guest again, trying to break the sequence. This time around, it's not a female, it's a male. So his name is Kiri, running a YouTube channel on his own now. And just wanted to, maybe it's a breath of fresh air, because as you guys know, this panel is quite bullish on Tesla. I'm the only one holding the ground for Baba. So today we have a fellow Baba Bull here. But before we go into all the discussions around the different investment, right? So Kiri, yeah, welcome onto the pod. Maybe you wanna just give a quick intro.
Thanks, Chicken. Thanks for having me. I'm also like very happy to be here. So I'm 27 this year. My name is Kiri, and as an investor, I started investing at around 20 years old. And before 20, I wasn't really into like investing and everything, because mainly it was like my parents' money, like pocket money. I just like spend everything. But after that, I realized that if I want to so-called like become financially free, I would need to actually invest money when like real money starts to come in, not like just pocket money. At 20, I started reading the book, The Intelligent Investor. And I think it really helped me to so-called build my fundamentals of investing into stocks. And from there, I bought my first stock after I got like my job after poly. I think my first pay was around 2K, and I invested it into Foot Locker. And after that, I just continued to invest into more investment stocks. After that, though, I went to travel with my wife. So I actually liquidated all my stock holdings and went to travel. I only recently started investing again, maybe 2 years-ish ago.
Transition phase, what was that light bulb moment at 20 that you suddenly wanted to pick up your own? Because I'm not too sure, maybe if I probe further, like, is your family a family of investors? Like, was there anybody that was just hammering the idea to you and tell you that you must invest, you cannot rely on your salary, etc., etc.?
Not really, but I was very keen onto investing actually like since younger days, maybe even like secondary school-ish. I was mainly focused on like basketball. So like my whole life was just like playing basketball, and then I didn't have any time for like any other things. Oh, and I think I spoke to my parents about like stocks, and then they were like saying like, don't even try those kind of things because like you'll lose money and everything. But I think I knew at the back of my mind, like I kind of wanted to do it and try.
Yeah, I just want to ask, like, have you watched Chiking's Baba video before you bought the stocks?
Actually, I'm not sure if it's like concurrently, because like while you're doing research for like Baba, then I'll see his videos as well.
So how much influence he has on you?
Okay, because for me personally, like I just mainly look at the numbers, and then like the rest is just like opinions. So I just want to hear what most people have to say. Yeah, and I think he's very informed lah, and most of the videos is quite well put together also.
So between Jiking and you, who is more bullish on Baba? Or Jiking and all the Baba bulls in Singapore?
Maybe I think before that, let's like put a disclaimer. Like, maybe I'll ask, like, in terms of your allocation now, like how big is
Sure.
what's your position, and don't need to give absolute amount, but in percentage wise, and how is your portfolio looking right now?
Right now, it was like 100% Baba basically, but right now I recently added China Construction Bank, so maybe it's around 80-20-ish. Yeah, but looking to add more China Construction. So
Okay, so circling back to Calvin's question.
Wait, I just want to clarify. So there's only 2 stocks in your portfolio right now?
yes, there's only 2 stocks.
Incredible.
I know, like, yeah, it's quite crazy, I think, from a outsider's perspective. I think, as in between me and him, I think it'll likely be me because of my allocation.
Yeah, based on that, chicken is not a real bababu, right?
Yes, I've gotten a lot of that comments already. I think I went through a similar journey. But I'm different because I didn't start out with US stocks. Like I started with Singapore, then I pivoted to US, then I went to Hong Kong. So back then, I think three plus years ago, I was also 100% Baba. Then I slowly shifted
Nice.
the allocation already. But I've never went to leverage lah. But that'll be a topic later on.
Yeah, this one I chat with Kiri before. I asked him, like, is there any investing concepts that he disagree, that most people agree but he disagree lah. And surprisingly, the answer he gave me was talking about diversifications. So maybe Kiri, can you like elaborate a bit? What's your view in terms of diversifications? Do you think that people like us who invest in, like 10, 15 stocks, I mean the so-called the right way to invest, these are all people that are clueless?
No, I wouldn't say clueless. I would just say, like, in my opinion, like, if I can have one stock, in a sense, like dollar to dollar value, like I'm buying $1 for 50 cents, and then the next best stock is, let's say, like 70 cents for $1, then I think it would make sense to me to put more money into the 50-cent one. And if there's nothing close nearby, then I would go all in. So, like, it's not as if like I choose, like, okay, I just want to have one stock in my portfolio. For me, it's like I'm quite flexible with the opportunities that come by, and just so happened for Baba to be, in my opinion, like one of the best opportunities, and there's like not much close. So then end up everything was into Baba.
I just wanted to ask, right? Because I got two questions.
Yeah.
First one, not very related to Baba, because you say that you went traveling with your wife, and earlier on you said that you were 27. So I'm just curious, when did you like get married?
Oh, I got married in 2020. So I was 23, I think.
6 years.
Right now, maybe 10 years already. Yeah, that time was around 6 years-ish.
You feel that you found your soulmate. I think why not, right? My second
Yeah.
question, right, has to do with your reading of Intelligent Investor, right? So I was wondering, like,
Yeah.
I think that book is kind of talking about value investing and all these things, right? But I was just thinking, like, is that the philosophy that you have when you do your investing, or has it changed since you read the book when you do your own investing?
I think it's mostly whatever the book says. Like, I never really like invent anything new, and there's like super little things that like I disagree with, like from the book.
So you will classify yourself as a value investor lah.
Yes, I would classify myself as that.
So you said Baba is like the best opportunity for you, right? Do you just like discovered this company when you bought, or is it like you discovered it like 2 or 3 years back? It's just that it was still expensive, so it doesn't cross your threshold. So you waited until like recently only you bought, because I think you bought close to the low, right?
Yeah, like somewhat. I think I started my position at 78, then I like slowly averaged down. Right now it's maybe around 73. But before this, I was mainly only invested in US stocks, and at most I bought like a couple of SG stocks. But I never ever considered China stocks because I felt like it was like way overvalued and overhyped. I'm not sure what happened, but I checked like Alibaba stocks. It could be Chicken's video. But I saw the stocks, and then like on that day itself, I decided to buy because I saw like the numbers to me like at that time was like really quite mind blowing. Like to me, it was like a screaming buy.
Sorry, just now you mentioned you also bought like US stocks, right? Then you pivot over to China stocks. But what made you do the pivot? Like when US stocks were like going up by so much, right? How were you able to sell them all off, then move into China, which isn't moving that much at that time?
I don't look really at the like returns or like the stock price. I mainly just look at the business fundamentals. So then like it made a lot of sense to me because the China one was like at super low valuation. So I just like, okay, I think it's probably a good time to enter.
I've been a follower of Kiri. I was the one that actually recommended your content to Kunti in the first place, I believe.
Oh, nice.
I don't think
Thank
Bunti
you.
yeah, I don't think Bunti's algo recommended him lah. But so I've been following your journey, right? I think pre-Baba you were all in Disney. Correct me if I'm wrong. I think you were 100% in
Yes,
Disney.
yes,
So
yes.
I just wanted to know your thought process on why, because it's basically 100% recycle of the portfolio, right? So you go all into Disney, and then I think you managed to sold before the thing tanked, and then you went to Baba. So I just wanted to know, is it the same process? Meaning if Baba rallies to a certain extent already, and then you 100% recycle the portfolio and go into another value counter that you see opportunity?
I think it depends again like on what opportunities like I get. But I wouldn't be opposed to it. I think like if another counter comes up that is way undervalued and Baba is like in a sense like overvalued or fairly priced, then I wouldn't mind selling and like going into another counter.
So which make me like wonder, right? Because just now you talk about the 50 cents, 70 cents theory, right? Like you see that's the best opportunity. How do you exactly determine that's the maybe I share with you my philosophy that I basically develop, or value versus fundamentals, right? There would necessarily be a reason, a story to sell, and then they say that the fundamentals suck. That's why the valuation is cheap. And they tend to be like it wouldn't, so good value or good fundamentals tend to be quite expensive, which is why you see a lot of these US stocks, they tend to trade at a relatively higher valuation. Then on the opposite is also true. When the story sucks, the macro sucks, the fundamental sucks, everything sucks, then the valuations tend to be cheap. So to me, I look at them as sometimes there might be a disjointed view lah, meaning maybe it has good fundamentals and then it gets cheap. So I just wanted to understand, how do you place a value, meaning XXX company today I think is the best risk reward adjusted, or like this is the most value. So I put 100% of my portfolio in it. Yeah, I just want to know like your thinking process.
In most cases, like the story matches like the stock price, but in like very rare occasions, for example, like right now Baba and like previously Meta as well, whereby I feel like the fundamentals are still intact, but because like the story or the media actually like bashed the stock so much that maybe like that's why the price drops. For me, that is when I feel like it's an opportunity, like when there is a difference between like the actual stock price and the business fundamentals.
And I can really go back and pinpoint, let's say Meta. So I'm also a Meta shareholder. So when I pinpoint Meta or Baba in this case, I can really pull out a time period, like maybe the 2 quarters, where the revenue is basically flatline or declining. And then people start projecting out, this business is a declining business, the moat is gone, and whatnot. And maybe now in retrospect, you see the business go back again, they say, oh, see, I'm so smart. But there is also a very real chance that this business will really like that continue decline downwards. So I just wanted to know, like, how do you make that determination that this is a good business to buy exactly?
Okay, so for example, like for Baba, when I bought like at around 180, let's say 160, because at the time it was at like 160 in terms of market cap. Then like its net debt is like negative 60B, and free cash flow was at 20B. So it's like EV to free cash flow is like 5. And for me, like an EV to free cash flow of 5 is basically already pricing in an earnings decline, because like the benchmark of like a stagnant company for me is like 7, like a PE of 7 or price to free cash flow of 7. So anything below that would mean pricing in a decline. And so if I buy at PE of 5, then basically I'm quite safe. Like if the company starts earnings growth, then it should be valued at more than 7. And if it let's say declines slowly or remains stagnant, then it would be still 5 to 7. So I'm pretty safe at that price point.
So if okay, I get where you're coming from. So if I can like make a conclusion here, meaning if let's say it's a value versus quality kind of trade-off, right? You do tend to place more emphasis on having a margin of safety in terms of valuation, like whether it's trading at 5 times, 6 times, when the normal is, I think, closer to 10, even at a stagnating or declining business. 7 is also a bit extreme, but yeah, am I right to say like you place more emphasis on the valuation of the business?
Yeah, you're right.
Okay, Buti?
Yeah, can I continue to expand on this? Because there will be business like for example, Intel, right? So it started out with like positive cash flow, and then maybe some people look at the PE and happily bought into it. Then the positive cash flow suddenly just like fall into negative free cash flow, right? So all these numbers, it's not like a fixed number, right? It changes over time depending on the strategy, depending on the fundamentals, depending on the environment, right? So how do you avoid this kind of situation where suddenly we are all surprised, it can drop a lot?
There's no avoiding like so-called a sudden turn of events, I think. For example, like Disney, I felt like I made a mistake purchasing that company because they do not have like the numbers still intact. Like the share price was down and like it seems likely that they're going to make a recovery, but the fundamentals are not intact. But for example, for Baba and Meta, I felt like both the numbers are still somewhat still there.
So what happened if Baba suddenly free cash flow dropped 50%? But it could be something that is not
Ah.
too worrying, right? For example, let's say, they want to expand overseas. They do 8 capex. They buy a lot more, like new logistic assets and so on. So it just appear on free cash flow, suddenly drop 50%.
Yeah, so if the free cash flow really dropped by 50% like over the next 1-2 years, then really no choice. Like because there's no way to predict. Like for me, I don't think there's a way to predict.
So you just sell lah.
At that point, if it drops 50%, I assume the stock price maybe drop even more. So I will probably hold at that point.
Depending on the assessment on value versus the price.
Case has happened, right? So back then when I was holding Meta, right, I entered at 160, it dropped to 90. So that 90, why it went into half, right, was really because the free cash flow just evaporated. Like Meta was, I don't know what Zuckerberg was doing. Basically, he just bombed everything into the metaverse, then he buy a lot of like chips, and then he just expand his own AI suite of capabilities, right? But that said, I do agree that when the numbers look bad, the share price tend to follow first. Or the share price will try to signal to the market that the fundamentals will look bad, and then it is dependent on the management team to show that whether they can recover or they can bring back what they promised, or what's the real FCF level in this case.
Just now we started with Baba already, right? Do you also pay attention to other competitors, especially those in China one now? For example, like JD, Douyin, like, okay, maybe, I don't know, these cheap things about Baba, right? I don't know whether it's like just specific to Alibaba because other companies are so cheap, right? And how do you assess the competitions among these different players in the same industry now?
I think at one point, JD.com was like so-called on par or even cheaper than Baba itself. I honestly, I don't really see like other companies or compare to like other companies too much. I would like to think that Baba should have an advantage just due to like its like size already. For example, they want to expand into another like location. They have the resources to do that. Usually, like when you expand to a new place, like you start to lose a lot of money, and like cause you want market share, then you lose even more. But they seem to have the ability to do that.
Then, in your view, what's the strength of Alibaba business as compared to the competitors? I'm just thinking, like, for example, JD, I think they are quite strong in terms of like their urban market. And then Pinduoduo, I think Pinduoduo business is like, their story is all about expansions into overseas. So they are executing well on that front also, right? So when all these companies, we can also put in Douyin into the picture, right? So when they compete against each other, what's the strength that Alibaba has as compared to the others?
First, like in the market. So like it usually helps like being the first in the market. And I'm not like a big story guy. I just really just look at the numbers, and then like, I don't really like care too much about everything else. The most profitable and the biggest. And if I'm not wrong, they also have to like give chance to other companies. Like there's like e-commerce in China as well, because I think they got like sued or like fined for like being like a monopoly. So like they have to give chance.
I just want to check, right? So you that time leverage into Alibaba because it's a good stock, ma. But what if the stock, it doesn't go up for like maybe 5-10 years? It is obviously a sentiment thing, right? So no, because like China has sold down so much despite it being good value kind of stock lah. So my question is like, how long were you prepared to hold this for, assuming the stock doesn't go up?
I would say like 5 to 10 years shouldn't be a problem, but I've never held a stock for 5 to 10 years, so I'm not sure like if I can actually do what I say. but I think 5 to 10 years like shouldn't be a problem lah.
I hold 3.5 already. But I wanted to ask Kiri, right? Like when you pivoted into Bava, was it 100% move? Meaning, or do you slowly add?
I slowly added, like I think I sold like maybe like 10K of like, which is like 25% at that time, 10K of Disney into Baba. And then after that, I was like, oh man, like this company is like too undervalued. So then I sold another 10K. So it's like half. And then I think Disney shot up a bit to like 90, around 96. So then I was like, okay, I guess at this point I have to go into Baba. So then I sold everything and went into Baba.
You are in a very comfortable place because I think your average, like compared to a lot of people that do tune in and stuff, I know that a lot of us have averages of like triple digits lah. They're not in the double digits. So even if you average down, it's very hard because I think it's quite hard to move the needle. But I think that's besides the point. I guess I wanted to explore further about this idea of recently you have a new ad, right? Which is a CCB lah. Not in a bad way, but the China Construction Bank, right? I wanted to know your thought process on how do you chance upon and why do you even bother going to Chinese banks?
I saw that like basically the whole like Hong Kong market and China market is like there's a lot of opportunities there. So then I decided to like just take a look, and then I sorted like the biggest cap China companies by PE, and then I saw like the banks is actually like extremely low, could be due to like the real estate, and then because right now China Construction Bank is like at around a PE of 4. And when I started my position is like PE of 3+. So just their dividend yield alone is like 8-9%. And they're only paying out like 30% of their income. So if they pay out like say 90%, it could even be like a dividend yield of like 24%. So which is quite insane. So I think that's why I entered, even though I was like quite reluctant to enter like banks because it's like a whole different type of like valuation, which I'm like not very familiar with. Yeah, but the numbers was just like too good to be true. So then I decided to make a position.
But if it's too good to be true, is it sometimes not too good to be true? What do you trust the books of those banks?
I think I don't want to like there's a chance that like they're faking the numbers and everything, but I don't want to play the game because if like that, then I won't be able to like invest in almost any company. Because actually in the past I did invest in a company that had like accounting fraud. This company Kraft Heinz. I think that was like my biggest loss when I first started investing. Like I think I put like 2K plus or maybe 4K, then I lost like 50%. Yeah, so I had a bad experience with accounting fraud.
But especially so it's a China company though. I mean that's the general consensus, right? That I also do understand because some of them are trading at like 0.3 to 0.5 book.
Wondering, right? Do you take into account the risk when investing in Chinese banks? I mean, not just Chinese bank, anything Chinese. Like they sometimes like the who C will have some policy that comes out and say, oh okay, I need you guys to maintain some liquidity. You must have at least this amount of capital in your banks, which restricts how much the banks can lend out. Typically, they can lend out like 10x, right? Like if they have 1 mil, they can lend out 10 mil. But if let's say, China suddenly like, I think 10x is too much. Maybe you should cut down to 5. Then suddenly all the loans that they made out, like, so that's something that I think they did to the property developers. Yeah, then that caused a lot of problem because they borrow in the billions. Yeah. Do you see that kind of risk maybe happening to the Chinese banks?
I think that with any stock, like there's definitely like risk of like, for example, like government intervention. But in my opinion, like right now, like because of how cheap like the Chinese stocks are, right, it seems like even if there is a government intervention, that like it will still be a good investment. But if I compare it to, for example, like US stocks, with so-called no government intervention, But once if the government like step in and do something about it, then I think like a lot of the investments would not be like good investments anymore. In a sense, without the government intervention, like we wouldn't also have apps like WeChat and like Alipay and everything, because if there wasn't government intervention, then like US would have dominated like the whole like Chinese market already. So usually a government steps in is like for the benefit of their own companies.
Different situations, right? Because sometimes government step in, they try to protect the local players, and you are the local players, you can cheers lah, yay, government protect us.
Yeah.
But sometimes when
Yeah.
the government step in is really going after you, your companies, because you have done something that the government don't like, right? So suddenly it's like the tuition business is just overnight gone, right? That kind of situations, right? So how do you, like look at situation like this? I think this is what Eric trying to ask.
Yeah, I was thinking like so many industry that got hit, gaming lah, then education, all this seemingly like they were not like drugs and all that, no, that like super bad kind of thing, but they were like doing their own thing. Then the government like, nope, I don't like people playing games too much. Then then they put a cap on the spending and all that. Then wow, even rumors of that will cause the stock to like jump off a cliff.
Yeah.
So I don't know, like how do you work that into your, do you take that in your stride, like it's part of investing, or do you like, because I asked that question because for me I invest in Tesla, then I see the stock like wow, how it chong up and down and all this. I feel very emotionally fatigued. So I don't know whether are you like very prepared for all this when you go into China stocks?
I wouldn't say like prepared, but I think like these are things that I don't really have control over. So like if it happens, then no choice. Like I have to just deal with the tank lor.
I think there are some things that are beyond our control. So if today, US, the Biden say, oh, I want to do some sort of restriction on the banks or whatnot, yeah, it's out of our control. But having seen all these interventions that China CCP has done throughout the few years, right? You still went in knowing that there's like they have been whack-a-mole for so many years, and then you still went in and say, it's out of my control. But my question is, it's well within your control.
I get what you mean. Okay, so maybe just to explain a bit, like if I purchase a China Construction Bank at like a PE of 3.5, like even if let's say for example like you said like they reduce the multiplier that they not, then in sense like doubling their or like reducing their earnings by 50%, then their PE would still be at 7. So then for me like a 7 PE is still like an internal rate of compounding of like around 14%. So I think an average 14% return, even after a 50% drop, is still like okay for me. Like it's still good actually for me. So
I think I can summarize for Kiri, right? I think simply put, his idea is that yes, he acknowledges the risk factors that you put out, but he's basically coming back and telling you that my margin of safety is so huge that you see, even if there's so much uncertainty, and it's because exactly of this uncertainty, that's why I can go in and take that risk. I hope that's correctly paraphrased lah.
Yeah.
I'm just thinking, right? Like you say margin of safety, right? Government like intervention, like what CCP is doing, right? It doesn't really depend on your margin of safety, right? Like for example, if you are invested in the private education sector, right? Like you may be like net cash, right? But once the government like implement like some sort of, oh, you cannot give like a this kind of group tuition or whatever publicly, you cannot sell at all, your business goes to zero. It doesn't care your margin of safety or one. In net cash, everything is basically just to pay your employee and yeah, your rental, everything, all your obligations. So it can burn down that advantage, right? Like literally overnight, like immediately. There's no like, it's not a deterioration of business fundamental. You know what I'm saying? Like it's just it's not a
Yeah.
competitor. It's Yeah, it's not even your business.
I-
It's just they destroy you.
I get it. Like they're kind of like God lah. They can say like anything happens, or like they create
Kind
some
of.
magic rule. Then yeah, you so called like you have to adhere to it. Very unlikely for that to happen, because like if they do this kind of things of like a sudden insane rule that like makes the business go to zero, which they can, but if they do, then like no one would want to invest in the country like in the future. So then I don't think they will do anything like too extreme. I think they will like show the power a bit, but like they won't be like too anything too over the top.
So the private education is not not relevant to you lah.
Oh, I'm honestly not familiar with that. I'm not familiar with the like they say, oh, you can't do that or anything.
But you know that
Yeah.
the company was effectively like just the business was super profitable. Like you know, Asians are kiasu, right? So they send all the tuition. But
Mm.
once the government come out with the whatever rule, right? Immediately it dropped like 90%. Yeah, so it was quite swift and quite brutal, I would say. I really didn't expect that because private education, you're helping the kids, by right. But they said no, putting too much stress. So I don't know their angle of implementing these draconian measures. I a little bit like, hey, you're not scared, lah.
Basically, what you are playing on is it is now undervalued. Then you are waiting for the stock to just rebound back to this correct value, right? Am I right to say that?
Yeah. Yeah, I guess you can say that.
Okay, so what is your price target for Alibaba in that case?
I don't really like have a price target to sell. But I think at a base they will likely be at least 300B like in market cap. Like I think that's like a very base form, because if we take like the Taobao Tmall, like they generate let's say around like 20B. So like if there's a multiple of 12, you'll get like 240B, and their net cash is like, or net debt is like negative 60B. So total 300B. And then we haven't include all the other segments as well. So it would likely, their base price should be around 300B. I think even at 150 is likely to be fairly valued also. But I might consider selling. Like depends on how quickly the share price goes up.
Yeah, so you are just banking on the sentiments to return, which I think is returning back already for this year. The last I checked, you were like 129% on Baba.
Now not really. Like so I actually like pledged my shares lah. So like I had to stop all my like margin positions and then before pledging. So it's like I don't have any margin position now on Baba, but the money that I pledged out, like I will likely like use it as like daily expenses stuff, and then anything extra from like income like rental or anything, then I will invest into like, for example, China Construction Bank.
So how does this pledging works? Like for example, let's say if the share price tank, right, you will still get margin call, right?
Yes. So if the collateral I give, which is the Baba shares, like if they drop below 84% of the value when I pledge, then I will start getting called. Yeah, that's around 57-ish. Like if my Baba shares drop to around 57-ish.
If that happens, right, do you already have cash at the sideline to put into it, or really you will just let the share get called away? What's your plan? If that happens, I'm not saying that will happen. Just in case.
I do have cash like at the side. So like I think likely I can not get caught until around 30 plus. And if it drops even below 30 plus, then like there will be another plan for that, I guess.
Can I ask what's the effective rate you are paying on the margin now?
6.11.
Yeah, I got a follow-up question. So instead
Okay.
of like using margin to buy, right? Why not just use like leaps instead?
So I did consider using leaps also, but like I'm not sure like when like the stock price will actually rebound. It could be like the prices stay around the same for like the next 1-2 years, then like end up I would get like liquidated lah, in a sense. So then I don't wanna really get leaps. In my opinion, like the right strategy for like Baba right now is actually to get like the deep in the money leaps lah. But I'm also like quite afraid because I feel like it's too risky for me. It's quite funny, right? Like cause I all in, but then I scared to go options. But yeah, I'm quite scared to go options.
$50 strike price leaps expiring about 2025 lah, 1 year later. The data is about 0.0. So basically, you are losing way less than the margin lah. So when it nears the expiry, what you can do is you roll it to another year. So technically, you are losing less money as compared to margin.
I'm not too familiar like with options also. So like if I can calculate like what you said, then it could be possible that I would think like the DITM leaps is better.
Okay, so I think just to confirm, meaning now you are 100% Baba, and the additional 20% is because you took a margin on, or you pledged your shares, and then you use the 20% to buy into the Chinese banks.
The extra 20% was actually like a personal loan in a sense, but like I personal loan use as expenses, then I use whatever I bring in and my wife brings in to invest. So it's like essentially 1 to 9%. But now borrowed money to my stock portfolio, it could be like, let's say something around could be like 60% ish on borrowed money. Yeah, but it's not everything is invested lah. Not everything is invested.
Do you consider local banks instead?
Yes, I think I did. Yeah, but because like I said, like I'm not very familiar with like how to exactly like value a bank. So then I saw like OCBC, DBS, UOB like around, if I'm not wrong, like 7-8 PE. Is it around there?
I don't know. I only
somewhat.
Look at their yields only.
Okay, yes.
Yeah, the PE is around 10.
I felt like around 10. Okay, yeah. Then I felt like it's not something that I would consider like extremely undervalued. So I didn't invest in Singapore.
One more question. I want to ask about your opinion on Tesla. One of your videos, you said that it was overvalued. So when would you consider going into like Tesla?
I think at maybe around 120 and below, I will start to consider. But I think in my opinion, like even at 120 is like likely to be overvalued also. Cause I think if I'm not wrong, like their highest recorded EPS or free cash flow per share is like 4. So even if it's like a 30 multiple, that would be like 120. And for me, like 30 multiple is already very expensive. So anything below that, then I will like just start to consider.
Actually, I want to ask, like right now, Kiri, you are doing YouTube full time, right? So what's the driver that lead you to these decisions to just doing YouTube full time, and also maybe can you share a bit on your the financial ends, like how do you like survive this period when your YouTube channel all this just starting to pick up, right?
So I think maybe my main driver is gonna sound damn cheesy, but like I really think like I want to help people to become financially free, because like when I see the world, and like it's a bit like sad, because like a lot of people like got their jobs and like not much free time. So then I felt like if I can contribute to helping like humanity get like more free time, then I think like it'll be a better place to live in. So that's like why I want to do YouTube. And in terms of like how I survive, my place right now is actually like rented out and is cash flowing maybe like 1.5K. So and my wife also works lah, but she works here and there because she's a real estate agent, and I was a real estate agent also, but I stopped doing already. So yeah, I guess that's about it. Like I actually don't spend much also. Maybe I spend, like the both of us spend around 1.5 only, like a month. So it's quite easily sustainable, I think.
So as always, the links to Kiri's socials will be in the link below. And I know this I don't know how this editing of this episode will be. I believe that the flow is a bit weird. We have been jumping around topics, but I'll try our best to basically arrange it nicely. And if you guys have any comments, please feel free to leave in the comment section down below as well. Any further topics that you guys hope to expand, and if there's a lot of interest, we can take it on and we can invite Kiri back on again. With that, we'll see you guys in the next episode. Goodbye.
Bye-bye.